Welcome to FXtech's comprehensive USD CHF analysis covering October 13th through 18th, 2025. In this presentation, we'll examine the Swiss francs performance against the US dollar during a critical technical juncture. We've synthesized insights from 5 premier financial platforms to provide you with actionable trading strategies and risk assessments. This analysis was prepared on October 20th, 2025. Using the latest market data and technical indicators. Let's dive into the key developments shaping USD/CHF's trajectory. Our analysis draws from 5 authoritative sources to ensure comprehensive market coverage. TradingView provides real-time price data showing USD/CHF at 0.79360, down 0.08% on October 17th. Investing Live, formerly Forex Live, offers expert technical analysis on support and resistance levels. ActionForex delivers weekly outlooks highlighting the steep decline from 0.8075 and critical technical levels. Forex.com contributes fundamental analysis based on central bank policies and macroeconomic factors. Daily Forex provides daily technical insights with specific trading recommendations. By synthesizing these diverse perspectives, we ensure you receive well-rounded market intelligence. TradingView data reveals USD/CHF trading at 0.7936 CHF as of October 17th, showing a modest daily gain of 0.08%. However, this masks significant longer-term weakness. The pair has declined 0.94% over 5 days and 12.46% year-to-date. Technical indicators remain neutral, suggesting a critical inflection point. Market sentiment shows extreme positioning with 87% of traders long, creating potential for a squeeze. The day's range spans 0.78730 to 0.79372. Volume stands at 86.55K ticks. This neutral technical setup against bearish longer-term trends presents both opportunities and risks for traders. ActionForex highlights that USD/CHF's steep decline last week suggests the corrective rebound from 0.7828 has completed at 0.8075, a temporary low formed at 0.7872, turning the initial bias neutral this week. 2 scenarios emerge. Bearish continuation below 0.7872, targeting 0.7828. or bullish extension above 0.7984 towards 0.8075. The bigger picture shows a long-term downtrend from the 2017 high of 1.0342 remains intact, targeting 0.7382. The outlook stays bearish while 0.8332 resistance holds. This critical juncture demands careful monitoring of key support and resistance levels. Understanding critical technical levels is essential for trading USD/CHF effectively. On the resistance side, 0.7984 represents the key breakout level that would suggest corrective pattern extension. Above that, 0.8075 marks the recent high, while 0.8332 stands as critical long-term resistance. For support, 0.7872 is the temporary low whose break would signal downtrend resumption. Below that, 0.7828 is the recent critical low, with 0.7382 as the 100% projection target. The 0.7872 to 0.7984 range represents the key battleground. Traders should monitor these levels closely for directional confirmation and position accordingly. For short-term traders with a 1 to 2 week horizon, we present 2 strategies. The primary bearish strategy involves entering at 0.7950 to 0.7984 on rallies, targeting 0.7872 and 0.7828 with stops above 0.8000. This offers a 1 to 2 to 1 to 3 risk-reward ratio. The alternative bullish strategy requires a break above 0.7984, with retest to support, targeting 0.8075 and 0.8100, with stops below 0.7944. Key considerations include watching 0.7872 support closely, adjusting position size for volatility, and monitoring Fed and SNB communications. Always use stop losses and never risk more than 2% per trade. Medium-term strategies spanning 1 to 3 months present two scenarios with different probabilities. The bearish scenario, with 60% probability, involves entering at 0.7950 to 0.8000 on rallies, targeting 0.7828, 0.7650, and ultimately 0.7382. Stops go above 0.8100, assuming 0.8332 resistance holds. The bullish scenario, with 40% probability, requires a break above 0.8075, targeting 0.8170 and 0.8250 to 0.8257. Stops go below 0.7944, requiring hawkish Fed policy or improved U.S. data. Comprehensive risk management includes conservative position sizing, maximum 2% risk per trade, diversification across timeframes, and staying flexible as conditions evolve. 6 key factors drive USD/CHF dynamics. Federal Reserve policy remains critical, with recent mixed data supporting a relatively hawkish stance. The Swiss National Bank's approach to monetary policy and potential currency intervention continues influencing CHF. Global risk sentiment affects both safe haven currencies differently, with CHF often outperforming during uncertainty. U.S. economic data, including employment, inflation, and GDP figures, drive dollar sentiment. Geopolitical developments impact risk sentiment and safe haven flows. Technical factors including extreme positioning at 87% long, option expiries, and algorithmic trading drive short-term action. Monitor these factors closely for trading opportunities. USD/CHF stands at a critical juncture following last week's steep decline from 0.8075. Upside risks include surprise, hawkish Fed shifts, easing geopolitical tensions, and stronger U.S. economic data. Downside risks encompass U.S. political uncertainty, escalating trade conflicts, and dovish Fed policy shifts. The 0.7872 level emerges as critical support, with breaks below signaling downtrend resumption toward 0.7828 and 0.7382. The long-term downtrend from 2017's 1.0342 high remains intact, while 0.8332 resistance holds. Maintain strict trading discipline with stop losses, appropriate position sizing, and continuous monitoring of central bank communications. Trade wisely, manage risk, stay informed.